This is a big week coming up for us as we have the Fed's interest rate decision, and even bigger than that is the summary of economic projections. So we get to see the updated numbers for end of year 2025. Now, 2024 is something that when we look at it, well, we're pretty much there already. So those numbers should be somewhat close to where we're at, although it might be a little bit telling from what the Fed expected in September to where we're at now for December looking forward. So this is going to be a big week. The Fed meeting, by the way, concludes on Wednesday. At 2 p.m. is when we find out the interest rate decision, and we'll take a look at some of the different numbers that are there, and we'll also give some commentary on what exactly we might expect from that summary of economic projections coming up. So let me put things up here for you so that you can see on the calendar right now, Fed interest rate decision, 2 p.m., FOMC economic projection. That's your summary of economic projections, also released at the same time. In my opinion, bigger than what the interest rate decision is, as when we look at the CME Fed Watch tool, you'll see that it's a pretty much guaranteed thing according to the bond market that we are going to get a 25 basis point rate cut from where we currently sit, and that would align with what was expected in September. And now, mind you, at the last conference that we heard Jerome Powell speak at following their meeting, he seemed very dismissive of the economic data coming in, and not necessarily saying that it didn't matter, but saying, yeah, we see some inflation kind of sticking around a little, maybe resurging a little bit, but this is to be expected. So he kind of downplayed anything about inflation. And so that is important for when we take a look at the PCE numbers that we've gotten recently. And then also when he talked about the unemployment rate, he was like, yeah, we should expect some softening and stuff, but not so bad. We're in good shape. So we actually got the sound from Jerome Powell like, hey, you know what, guys, green light. And so far in the markets, we've seen those green lights. And we will take a look at the indices coming out here, at least ETFs that track them. SPY for the S&P 500, QQQ for the NASDAQ 100, IWM for the Russell 2000. We'll also take a peek at Bitcoin just because that's some pretty big news right now. But those are the four charts that we'll explore. In any case, when we look at the different numbers that the Fed talks about, he came off as fairly dovish or fairly complacent. I don't know how you want to phrase it there, but he pretty much gave us the green lights. I said so after we heard him speak the last time, and now here we are coming up again. Will we get Jerome Powell speaking in the same way, or is he going to go a little bit more hawkish on us? So if he stays status quo, I think the markets are going to party on. And according to what he says anyway, as a catalyst, should be upward pressure. However, if he changes his tone and goes hawkish on us all of a sudden, that could be something that would be a downward pressure for the markets and probably snap pretty quickly. So we'll have to pay attention to that. And then there's also other facets besides hawkish or dovish. And so let's get right into the numbers that we have here from the past summary of economic projections. So this one is from September. And so we'll use that as a little bit of a guidepost for what we could expect coming into December. So when we look at the change in real GDP, we'll look at down at the 2024 end of year numbers and then a little bit at the 2025 numbers. These, I think, are the most telling columns. I think 2026, that's more of a goal for them, I think, more so than it is where they think that things are going to end up, even if they do talk about it that way. And then, of course, they have the longer run rates. So change in real GDP, they saw end of the year at 2%. Well, when we look at the GDP numbers for that, so let me go here. GDP consensus right now is coming in at 2.8 for the year, for the rate that we have for GDP. So expect to be 2%, coming in at 2.8. So GDP rocking, that's a good thing for the market. That shows economic strength when we take a look at that one. And then we go to a summary of economic projections again. 2025, they actually seen us stabilizing at 2% all the way through. Longer run rate coming out at 1.8%. Unemployment rate, they saw softening to 4.4%. Well, where's the unemployment rate right now? Sitting at 4.2% as of the November report that we got at the beginning of December here. We'll see when January comes out if we do get that. So unemployment's actually better. So GDP better. That's a good thing for the markets. Unemployment rate so far better. That's a good thing for the markets. And so let's take a look at the other numbers that they have. PCE inflation. In June, they said 2.6, and then what they said for September was 2.3. Well, if you take a look at the PCE numbers, so that's specifically this one that we're looking at right now. When we go to that, this is, let me see, June, there you go, June 2.6, and then we started going back upward to 7.27, and so that's actually going kind of backwards. Now, mind you, Jerome Powell kind of said that they expected some near-term inflation to happen, and so that's what we're seeing right now. Time is yet to tell whether or not we're going to see that start to taper back off again, that we start to see more cooling with the inflation numbers. We're just going to have to wait and see what exactly we get for that one. So what we have so far, GDP up, good for markets. Unemployment rate down, good for markets. PCE running a little bit warm. Not necessarily great, but I think that we need to really see the next month's numbers. So we'll see those when they come out. So for right now, trending back upward, that could be something that impacts what Jerome Powell has to say. It could be something that might cause him to have to speak a little bit more hawkishly. Hey, it's something that we're really continuing to monitor. And, he could say something like still trying to keep things pretty cool-headed and everything, especially if he expects any sort of underlying weakness that just isn't showing up in the lagging data yet. This could be something that he comes off as dismissive again. Yeah, we expected this inflation to happen. We should see this be transient, should pass through. Now, there's that dangerous word at transient. So, or transitory, I guess was the word itself. Could be transitory, passes right by, and then there you go. They expect the inflation to cool off. So we'll see if we get that commentary from Jerome Powell. I think it's really important to hear what he has to say about the recent inflation that we've seen. Does he change his tone or not? Or is he still dismissive like he was following their last meeting? So we saw for core PCE, here it is, core PCE is the 2.6, and we actually came in at 2.8. So actually we hit June's numbers so far, and we're actually up ahead of where September's numbers were. So we didn't have as much cooled inflation as we thought, and we didn't have as much unemployment as we thought, and we have better GDP numbers. So overall, that spells good things for the markets. The inflation thing is something to closely monitor for that. Where do they think the federal funds rate would end up? 4.4 is what they have for that one. And that actually is something when we go to the CME FedWatch tool. Where do we find ourselves right now? 4.25 to 4.5. Now giving a single number to that, that is that 4.4 that they're talking about. It's actually halfway between that is 4.375, which rounds up to that 4.4. So that's what you see in that. So what we have is a 97% chance, according to what we have from the CME FedWatch tool, to get that rate cut coming out on Wednesday. So that would fall right in line with the Fed's expectations. Now, if we look at December of next year, 375 to 400. So falling right in there, right around that 39 number. How does that compare with September's summary of economic projections? That's actually 225 basis point cuts higher than what they had. So I should say that we didn't cut as much according to the CME FedWatch tool. That right now it's not reflecting that we're going to have that same softness, that we're going to see more of that higher for longer play out. So we'll see if we get that coming from the Fed's numbers. I do expect this number to actually increase over that time. So we'll have to watch and see. So really for 2025, do they see continued strength happening with GDP? If they do, that should be something that should be a green light for markets. And then what about the unemployment rate? Are they still seeing a stabilization that they were talking about during the last summary of economic projections? If so, which now, mind you, the unemployment rate still is fairly low by historical standards, we are watching to see the rise that we get from that unemployment rate. And so that's really important to keep your eye on. So when you look at this, this goes all the way back to, let me see, January of 2004. So we were above 5%, so between 5 and 6%, then dropped down into the mid 4s through 2007. Great recession hit. We hit at 10%, and then we had the anomaly through COVID happen, in which we hit almost 15%. And since that time, bottoming out well down below that 4% number into the mid 3s. Now we have that climbing happening. What we want to watch is, will we put in a lower low next? Will we put in a higher high? I think that's the next important value that we get from the unemployment rate. We definitely want to see what exactly is coming our way with that. So for the numbers that are coming out for us, what do we want to see? Well, we want to see continued strength in GDP through 2025. If that is something that is still expected to taper off for us, then that says that the Fed is expecting things to weaken from where they're at right now. Unemployment rate, are they still saying 4.4%, or do they see it going higher? Do they see it stabilizing? Do they see it going lower? That's going to be another thing that's going to be an important catalyst to the direction of the markets, especially with the Russell 2000 stocks are expected to go, and that really goes into the inflation values that we find as well through PCE. So what exactly do we see there? Are we going to find that transitory inflation, or is it going to be something that repeats on us, that puts us back up into the 3s? Now, mind you, I think crossing back over into that 3-point whatever territory is something that could start to undo whatever sort of commentary that Jerome Powell is giving out. If he keeps on saying that, hey, this is going to pass, and then it shows that it's not passing, then the markets could get spooked because they'll be like, hey, you told us transitory last time, and then inflation got out of hand for you. And so is this another case where we think that the inflation should pass, should be transitory for us, or is it going to get out of your hands again? So that's something that we have to be aware of and have to pay attention to as we see those reports come out. So let me put up the charts here, and we'll start talking about the S&P 500. We'll do this so through SPY. Now, mind you, I think that this is finally a time where here's about 610. It's actually 609.83. I think that this could be the week if we get good news from the Fed about strong GDP, low unemployment, low inflation, and also further cuts to the federal funds rate. Are they still seeing that 3.4? Because if they're still seeing the 3.4, that's down below what the bond market currently has priced in for the end of 2025. So if that's the case, that could be very, very good for the markets. That could send them higher from where they're right now. I think we finally break that 610 number for the S&P and then game on from there. If we toss up a quick Fibonacci extension from where we're at right now, mind you, no guarantees, but that could put 627 in our sights for just this most recent climb that we've seen right now. So that would be several more percent put onto that. That could be a little bit more run, a little bit more gas in the tank for the S&P. Moving over to QQQ, had a little bit of an indecisive day, indecisive close on Friday, up in the pre-market hours this morning. Now, mind you, 534 is that new number to beat. Up above 534, which I find to be minor resistance. If we can get up above that, that still gives us that green light up to 548. We could be hesitant leading up to the numbers that we get from the Fed on Wednesday. Now, mind you, Bitcoin being a risk asset, but also still more and more an inflation hedge that we have out there, a little bit more tied to what gold might happen to be. The world government's kind of eyeing it up. Bitcoin could be in that big rally mode where it finally starts to push towards that 120,000 that I think it's going to hit based on the cup and handle pattern that we've seen recently for Bitcoin. I think that we're still on that path, still in that trajectory. I think there's still more gas in the tank, and we also most recently hit new all-time highs. Now, mind you, the Fed can help us out with the NASDAQ 100 tracked through QQQ that you see here, and it could also help out Bitcoin. Now, IWM trailing off recently, and we're getting down near the 50 SMA and EMA. Now, mind you, we didn't quite get there. We're still bounding back up a little bit. We're down below the 20-day, not great. The 5 crossed over the 13 nearly crossing the 20. That might happen today. We want to keep our eyes on that. I think the Fed is going to make or break this. If we get brought down to the 50 on this one, and then we get a dovish Fed with more cuts, but we see unemployment still stabilized, we see strong GDP coming out of that, they see lower inflation coming out, like things that could really have the stars align for us. Russell 2000, I think, is really going to make that next rocket ship. I think it finally takes us up over that 250 mark from where it's at right now. So that could be a significant climb if the Fed goes hawkish on us or they see things pointing towards recession. Either one of those two things could be something that really starts to really weigh down even further on the Russell 2000 stocks. Let's wrap things up with Bitcoin. Bitcoin is making a trend line across the tops of these candles. This is a daily chart that we're looking at right here. And today, according to Bitcoin's numbers that we have on here, let me see, 106,533, seeing a little bit of selling pressure still coming off this same line as we saw back here, a little bit more selling pressure there. So we'll see getting up above that trend line is going to be important for us. Now, mind you, that 120,000 mark, let me put a horizontal line on there as I've had it in my previous videos, because that is a price that I think that we could likely see again following the technicals. Almost got there. There we go. Perfect. That's the mark. I think we're going to overtake that with a little bit of further upside. I think maybe even like 127,000. We're going to have to watch for that. So we'll have to look and see if we can make that push up above that 120,000 mark. I think that that is a very critical value for us that's coming up in the near future. I think that we could still make it by the end of 2025 easily. If we don't see it then, we could still make it on this most recent run, this most recent rally for crypto. So guys, thank you very much for watching. If you want to see more of my technicals, more of my buys and sells, find that link down in the description for the Patreon. Head on over to the Discord. That's where you'll find everything. And if you guys want to learn to do the technical analysis yourself, you can do so using the link for Stockmo Academy and get access in that course to the bread recipe trading strategy. It's one I personally use. Stockmo personally uses it. And the people over there learning about the bread recipe, learning how to set it up quick, easy to use, easy to read, easy to follow, they are absolutely loving it as well. Tons of testimonials coming out all the time talking about the success that people are having, oftentimes paying for the course in as little as one trade. You can make it even easier to pay for that course using the code word DOCTOR, DOCTOR. It's going to give you a massive discount on that course. So you not only do you get an incredible course, but you also get it for even cheaper using that code word. So thank you guys very much for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.